Our next guests are the Smarter San Diego reverse mortgage experts, the Harms team, father-daughter Scott and Christina Harms. How you guys doing?
Good. Good to be here.
Good to see you.
All right. Great to see you all again. It's great to have you back on the show for the third time now.
Lots of good information to go
Great
over.
information talking about underfunded retirements, how reverse mortgages work, how you can use them as a financial tool. And today, I really wanted to hit something that I think has been a big topic in the arena of the financial assessment, which is the changes that came back in April to the reverse mortgage industry. We've had some time now. There's been a few months to kind of see how it's going. Scott, you think it's a good thing, right?
I really do think it's a good thing. Now, FHA had about an 8% default rate on their reverse mortgage portfolio, which is about twice what's acceptable on traditional mortgages. So how do you get that default rate down? Well, you identify where the problems are. And you might say, well, how do you default on a reverse mortgage? There are no mortgage payments. Well, defaults were coming from borrowers who could not afford to pay their taxes, property taxes, or homeowners insurance. So this new financial assessment is a pretty simple qualifying process that we, Christine and I, work with our clients personally on, step by step, work through the process just to identify that they can make their property tax and homeowner insurance payments.
Yeah, so it sounds like it's a big deal, right? I mean, but is it really that big of a deal to go through the financial assessment process?
It's really not that big a deal. And again, FHA is just looking for the 8% of the homeowner population that can't pay their taxes and insurance. What that really means, Derek, is that 92% of homeowners will pass financial assessment. It's important to think about because in our previous segment we talked about long-term care insurance and that 70% of applicants between the ages of 60 and 79 are turned down.
Right.
So another reason why a reverse mortgage is a great alternative to long-term care, even with the financial assessment component.
Those 8% that may not pass the financial assessment qualifications, it's a really great opportunity for them. We're identifying, these are the people that probably can't afford to stay in their home anyhow, but what we might be able to do is sell their current home and downsize. They may be able to afford to stay in a smaller purchase property. You can do that with a reverse mortgage for purchase. Most people don't know that, but if you can do about 50% of a down payment, you can do a reverse mortgage for the other 50% and never have a payment on that home that you live in.
So, Scott, when we jump back to financial assessment, what does this mean? What am I qualifying for now? Because if I'm 62 years old, I'm a homeowner, and I'm thinking about a reverse mortgage, and now I hear, oh, now you've got to have good credit. Now you've got to have a certain amount of assets. I mean, what is it that they're really using to qualify people with?
It's a little bit like how the VA loans have worked for years in that they're calculating a residual income number. And that's going to be after pensions, Social Security, investment income, whatever your sources of income are, total those up, subtract housing expenses, taxes, insurance, any monthly payments that show on your credit report, and then they use a formula to figure utilities, what those cost each month. So then take your monthly expenses from your monthly income, and they're looking for a residual number there. And it's fairly low. It's under $600 for a one-person household and around $1,000 residual for a two-person household. And so far, all the clients we worked with on financial assessment, we've helped them work through the paperwork, gather their documents, approved, no problem.
Okay, so you haven't seen it really affect things in a negative way then. It's just kind of making people more aware of the fact of here's what's required in order for this to work out.
It really, and I think it changes the whole financial world's perspective on what a reverse mortgage is. It's now a mainstream, underwritten mortgage product, and I think some of the really unwarranted bad press from the past will be going away.
Yeah, because a lot of that was based on people getting reverse mortgage or being sold a reverse mortgage, right? Who probably didn't need one or shouldn't have gotten one, but they did. And now with the assessment, you're able to use it as a planning tool. It's part of, the reverse mortgage is now a strategic planning tool for your financial future, and that's really how it should be used anyway.
It really should be, and there's really a two-step process to getting the reverse mortgage. Step number one is the financial assessment, which again, we help line by line our clients go through the financial assessment. And then second, and HUD's required this for a long time, it's independent HUD-approved counseling. So once we've worked through and identified that, yeah, we think you're going to qualify, no problem, our borrowers do the counseling with that counselor just to make sure that they're thinking about the right things, making good decisions before they proceed with the reverse mortgage.
Okay, so let's go all the way to this point where I'm a 62-year-old homeowner. I'm thinking about using reverse mortgage as a tool. I sit down, I meet with you, or let's say I go to one of your events and I learn a little bit more from one of your events, and then we meet with you afterwards. We discuss, we set aside a time for a consultation, sit down, and okay, I decide, all right, I want to do this. I want to do reverse mortgage. What does that process look like? How long does it take for you to execute from there?
It's really about a 30 to 45 day process from the time you decide, hey, let's go forward. First step is we give you a simple list of documents that you need to get together. And the good news is we're local. We're hands-on. And that's why we're the Harms team, because Christina and I together or individually will hold our clients' hands all the way through the process. That's important because you might have a 75, 80-year-old homeowner that hasn't had to gather documentation for a loan approval in 20, 25 years. It's really pretty simple documentation. We're there to help pull it together. Once that documentation is pulled together, we fill out all the application paperwork for the client's signature.
Wow.
We get them ready with the FHA guidelines on the HUD independent counseling. And once the counseling's done, it's off to the races. Everything is kind of behind the scenes at the lender at that point.
Okay, so for me then, I really don't have to do a whole lot if I'm that homeowner. I mean, I educate myself, help determine a strategy with your all's help, and then really you do all the heavy lifting.
That's one of the big benefits of working with the Harms team is we pre-qualify you pretty thoroughly, take a look at all of the payments, all of the credit, all of your income before ever having you go to counseling. So we make sure our clients don't spend any money before we think the deal will go.
Okay, fantastic. So what's the catch? It's all, it sounds so amazing. I mean, you have the opportunity to use the equity in your home as a financial tool to help fund your retirement, as we've discussed in the past, help fund long-term care, or as an alternative if you can't qualify for long-term care. What's the catch? What's the bad news? Is there anything from this financial assessment?
Really no catch for financial assessment. And with a lot of our clients, we actually have their kids involved in the decision-making process, their adult children. And we really like that because it is a family decision. And even for our clients who can't qualify, that may be a red flag for them or their kids that they need to be looking at other life choices, for the rest of their retirement.
A fantastic point. If you don't qualify, based on the assessment, the way it's set up, that means, hey, maybe we should be looking at something else to see why we're not qualifying, and maybe you could qualify if some other changes were made.
That's right.
Okay, fantastic stuff. Thank you so much for being here, Scott and Christina Harms, our reverse mortgage expert teams.
Thank you. And please check out our website for upcoming workshop in your area, time and date. You can register right on the website, or call Christina and I personally to register for the workshop or to set up a personal consultation.
Great stuff, guys. Really appreciate your time. Stick around for more Smarter San Diego TV, where we guarantee to make you smarter than everyone else, commercial free.